Welcome to you and your colleagues on this inquiry into the banking inquiry. Can the Governor and Lord Turner and yourself introduce yourselves formally for the shorthand writer, please?
Well, I'm the Chancellor, and with me we have the Governor and the Chairman of the FSA.
Thank you. You have that shorthand.
We're all clear about that.
Good, okay. Well, first of all, I'd like to welcome you along with your colleagues, because this is, I believe, the first time that the tripartite authorities have appeared together to give evidence. Now, we're well aware that it is a hugely busy time for you, so we're very grateful that you have taken the time to come along. Today's evidence session is the first in our inquiry into the banking crisis, and next week, on 11th of November, we will deal with accounting standards, and this will be followed on the 18th by evidence from the nationalised banks, and we will be publishing details of these evidence sessions shortly. Now, it's also a groundbreaking evidence session in another way, in that for the first time a departmental select committee has invited members of the public to submit questions ahead of the evidence sessions, and we are delighted by the public response. And you can see the result, Chancellor: 5,000 emails to the committee with questions to all the principals. Now, some of them will be read out today, but all of them have been carefully examined and have contributed to the briefing before us. Now, many of the emails the committee has received have been about the potential losses suffered by the Isle of Man and Guernsey depositors in Icelandic banks. But to ensure that we give sufficient time to cover all topics, we will discuss these issues towards the end of the session. And Governor, I am aware that you're currently in Purda. You have the inflation meetings next Wednesday and Thursday, and therefore you're unable to answer questions relating to your forthcoming interest rate decision or the forecast. But you'll be glad to know that the committee will discuss these with you when you come before us again for the November inflation report. So can I start with you, Chancellor? And Ted Whitten has put in a question to you, and he says, where has all the money gone? In any deal, somebody wins and somebody loses, but this time everybody seems to be a loser.
Well, Mr. McFall, it's a very general question, and let me deal with it, because it perhaps sets the scene for the discussions we have this afternoon. We face at the moment, along with every other country in the world, an extraordinary set of circumstances where the banking system all over the world has been under extraordinary strain since the summer of last year. And it culminated, as the Governor said in his speech 2 or 3 weeks ago, with a situation where many banks across the world had effectively stopped lending to each other. Now, why does that matter? Well, the banking system is absolutely crucial, not just to the world economy, to our own economy, but it matters to individuals, it matters to businesses. We all rely on the banking system to operate effectively. Without it, quite simply, the country would come to a halt. And that's why, over the last 15 months or so, we have had to take a number of steps that in past years we might have thought to be extraordinary, like the nationalisation of Northern Rock at the beginning of this year. And you recall that even within Parliament that was deeply controversial at the time. Indeed, there are some people who still believe it was the wrong thing to do, but it was a very controversial thing to do. And we were perhaps one of the first countries to have to face up to a particular problem with what was, I think, our fifth biggest mortgage lender at that time. We had a similar problem with Bradford and Bingley in September. And of course, since September, since the collapse of Lehman Brothers in the United States, the problem became acute, as I say, across most countries in the world. That's why it was necessary for us at the beginning of October to announce that we were going to embark on a major programme to help our banks recapitalise, to build up their strength so that we'll be able to continue to lend to each other, to businesses and to people. We've put those measures in place now, as I announced in the House of Commons on the 13th of October, and that process is gradually being worked its way through. Now, as I think I've said on previous occasions, if you look at the money that we have put into the system, the money that we've put into Northern Rock is in the course of being repaid. In fact, it's being repaid slightly ahead of the schedule we planned. in terms of the money that the Bank of England has been lending through its special liquidity scheme, that money is lent to the banking system and it is repayable over a 3-year period, so we get that money back as well. And in relation to the recapitalisation of the banks, of course, the government gets shares in return for that recapitalisation in respect of RBS, HBOS and Lloyds, because the other banks have chosen to raise money on their own account on the private markets, and therefore the government gets shares which eventually, when we get out of these shareholdings, can be sold. So yes, there is an upfront cost. Yes, the government has had to intervene, so has every other government and every large economy in the world. But the reason that we're doing it is because it's necessary to maintain the financial system, because, as I say, we all depend on it. Now, that's a very long answer to the question, but it's a perfectly fair question that people can ask. I don't know if either the Governor or...
I think I've got questions for the other participants.
I'm sure they would agree with
we
what
have
I
up
said.
to 90 questions, Chancellor, but we don't want you here till 10 o'clock tonight, so we're going to direct it at one person and then a short answer. And Lord Turner, from Gavin Elliott, the £37 billion bailout of the banks, is that not an admission that regulation has failed totally?
I think, to be honest, it is an admission that at the level of the whole world there was a failure to see enormous risks developing in our financial system. I think in retrospect, hindsight is a very useful thing to have. It is clear that the world for many years was on a boom of credit extension, which turned out to be unsustainable. And I think there are major questions that raises also about the capital adequacy regimes which we and Europe and America and the whole of the world have applied to banks, and whether we need to change those in future so that they prevent that sort of boom of credit occurring. I think, therefore, what I would entirely accept is that there are very major questions to be asked about the whole structure of how the world has done financial regulation, in particular in its capital adequacy regimes, its oversight of liquidity and fundamental things like that.
Okay, Governor, when the problems in the banking sector were reported in the television news in the past, people spoke about peering into the abyss. What would really have happened if the banks had not been bailed out at the taxpayer's expense? And has the taxpayer not been taken for a mug here?
No, the taxpayer has not. As the Chancellor said, this is an investment in the banking system, which in the end, I believe, will pay off. It was necessary to recapitalise the banking system so that it could continue lending to the real economy, which is vital to all our economic prosperity. When the banking system fails to do that, as a result of a complete collapse of confidence in the worldwide banking system that we saw, not just in the UK but around the world, it was necessary to take drastic action. And that action, based on the experience of previous episodes that we've seen, was one of recapitalisation. I think that was exactly the right thing to do in the interests. This was not done in the interests of the banks. This was done to protect the rest of the economy from the banks.
Yeah, but you were talking about moral hazard, Governor, and you told us in this committee you'd warned the banks about it. It does seem, in that sense, that you're warning about it. Nothing was done, that the taxpayer really has been taken for a mug.
No, the taxpayer has not. I mean, the taxpayer is putting, as the Chancellor said, money up front. That does not mean to say that it won't get money down the road which will more than justify the original sums put up.
Well, I hope that satisfies Mr Peter Mackay, who put in that question. And Chancellor, from the questions we've received, it's clear that the government has some explaining to do for the public. Dennis Sayers was certainly not alone in asking, where are you going to borrow the money from to fund the banking bailout, and what will be the consequences of such a level of government borrowing?
Well, the answer to that is that the government borrows that money from the markets in the normal way. I will set out the consequences of that together with the wider consequences that the government is having to deal with as the economy slows down and our tax receipts slow down at the time of the pre-budget report and, of course, again at the budget next year.
Michael.
Well, I've loads of questions about Iceland, but an awful lot of people have emailed us about who was really responsible for letting all this happen. And we seem to have this impression of see no blame, hear no blame, and take no blame. Chancellor, if I could begin with you. Sean Walsh asked us about your responsibility. If you take credit for the boom, why won't you accept some responsibility for the bust? These were British banks, Northern Rock, Bradford and Bingley, Lloyds, the Scottish banks, over-lending to British borrowers and doing so under the control of the three of you.
Well, I think firstly, all of us have to accept responsibility for the regulatory regime we have. We all have to accept responsibility for, in my case, the wider conduct of economic affairs in this country, and I will always do that. I think in relation to the regulatory system generally, the problem I see it is this, that in the past governments have tended to concentrate on the regulatory system within their own country. And, as you know, we made major reforms to the regulatory system 10 years ago, essentially ending a self-regulatory system and bringing the regulatory bodies together. What has happened here, as Lord Turner has pointed out, is that the problems that have built up over the last few years and became acute by last summer of 2007, is that whilst individual regulators were focused on what was going on within their own areas of responsibility, and there are clearly lessons to be learnt there as well, as the FSA acknowledged earlier this year, where the system is deficient is in spotting problems that are building up not in one country but in several countries. Now, in this case, it happened to be primarily within the United States, but it is a problem, which is why for some years we have been arguing for far greater cooperation between the regulators. That's why we helped set up the Forum for Financial Stability 10 years ago. But undoubtedly, looking at just to finish on this one, well, if you're going to ask a question, then I'd like the opportunity to answer it. Undoubtedly, there are lessons to be learned. Nobody can look at the present system and say that there aren't lessons to be learned from it. There are, and particularly in relation to making sure that regulators are focused on what is going on not just in their own country, but what problems might be building up elsewhere as well.
But Mr Walsh actually says government should have been well aware of the multinational nature of banking transactions. You and Mr Brown were in overall charge of all this. I mean, why don't you accept responsibility and say sorry?
I've said to you that I accept responsibility for everything that I'm responsible for. But in relation to what has been happening in the banking system overall, I think there are several levels of responsibility. Yes, in our national regulators. Undoubtedly, we needed to toughen up what was happening internationally. There's another area which we overlook at our peril, and that is the responsibility of boards of banks, who are supposed to be the first line of defence in relation to their own institution. Now, yes, we've got to look at what governments are responsible for. We've also got to ask ourselves, how do we ensure that in future banks actually know what they're doing, not just at a senior level, but at middle management and so on. And the difficulty we've had over the last few years is that the situation was allowed to build up where as the money flooded into the system, interest rates were low, people were looking for better returns, and they lighted on the securitized market. And then, of course, when that went wrong, when people started to default in America in 2007, the consequences for the rest of the world were catastrophic in terms of the health of the banking system. So, yes, of course there are lessons to be learnt on our part. There are lessons to be learnt in every single country in the world. But crucially, it's important that we make sure that we have a far better surveillance, far better monitoring of problems that are building up. And, we've been concentrating on America. I think we do need to understand that as the world becomes smaller, in the sense that we're getting rapid growth in India and China and so on, we need to make sure that we keep a close eye on what is happening right across the world.
Well, we're coming on to questions in boards of directors, whatever, later, Chancellor. Nick?
Chancellor, we had a question here from Mr David King, asking whether the government quantified the whole extent of toxic assets to which the banks were exposed before offering the £50 billion bailout package to them. Did you actually go into that sort of detail with the banks that have been in receipt of the recapitalisation money?
Well, what we did is we asked the Financial Services Authority, which is the regulator of these banks, to calculate how much additional capital would be required in relation to each bank. And they took into account, and I'm sure that, whilst I understand you are passing on emails to me, I think I hope, Mr McFaul, you will allow, where it's appropriate, us to contribute together, because it might explain how the FSA did this. Of course it took into account the exposure to which we were aware that banks had to deal with. Otherwise it wouldn't have been possible for us to have reached a calculation as to how much each institution was actually able to increase their capital by. That was absolutely necessary.
Could I expand on that? I think it would be useful to explain the role of the FSA in reaching those judgments as to how much capital was required. We had reached a point of view at the tripartite level altogether that a very significant recapitalisation of the banking system was required, and of specific banks was required, to restore confidence. We had got to a situation which was mentioned earlier, the seizure of the money markets, where non-bank institutions, whether they be corporates or pension funds or insurance companies, were increasingly unwilling to lend to the banking system at anything other than overnight. And this was becoming extremely critical. And of course, once non-banks are only willing to lend to banks overnight, banks can only lend to themselves overnight. The interbank becomes overnight. So this was the whole seizure of the interbank market. It was obvious in discussions that something radical had to be done to restore confidence, and that confidence has, as you know, three elements to it: Bank of England liquidity support, guarantees to certain categories of funding, and recapitalisation. The scale of the recapitalisation we then worked out by running extreme stress tests, and we deliberately used fairly extreme stress tests on the assets of the banks, looking separately at their UK mortgage assets, the perfectly ordinary mortgages which are on balance sheet, at their ordinary corporate assets, corporate lending assets on balance sheet, and at the assets in their Treasury and capital markets activities, which might include some of the ones which people tend to call toxic, though there is no precise definition of what we mean by toxic, but it certainly includes several where the present market value of those is very much below the original value of those. So there was a process of developing a set of stress tests which defined what we believed was required in terms of recapitalisation to take them to a level where people could absolutely clearly and without doubt have confidence in them. Now, the net effect of that, can I just say one final thing? The net effect of that is that we have taken them to a level of capital which is well beyond what the classic international rules of capital adequacy defined, as indeed have other countries in similar recapitalisation programmes. And at some stage, but it needs to be done in an internationally coordinated fashion, we are going to have to explain what a long-term capital regime will be, accepting that what we have done at the moment was entirely appropriate and required for the specific circumstances that we faced.
But so far, we haven't had a return to trust and confidence that existed 12 months ago, despite up to £500 billion worth of support to the banking system in this country. Isn't the key problem that banks do not trust each other because they still believe that there is undeclared toxic assets or liabilities for their fellow high street bank partners? And that's why we haven't returned to lending. Isn't a way forward to actually publish or insist that every institution actually publishes what its exposure is, and then while it may cause short-term problem, it is only the long-term solution?
Well, that is a matter for the public accounts of those companies, and they are subject to accounting standards, which on the whole require them to use fair value approaches rather than accrual historic cost approaches in relation to that. I think some people have raised issues as to whether that process should have gone further, but on the whole I think there has been fair openness in terms of the accounting. So I don't entirely accept that the slow pace at which the money markets are returning to normal can be put down to a continued uncertainty about that accounting treatment. I think it is simply the case that when you have had what was really an extraordinary, extreme collapse of confidence, and the Governor has described it, I think, as the biggest collapse of confidence in the money markets which had occurred since 1914. When you have that, it simply takes time for people slowly to return to confidence. And I just reiterate one thing. One of the crucial elements of the confidence here is not the banks in each other. It is non-bank financial institutions and corporates in the banks. It is when they are willing to start depositing at the banks with the banking system at 3 months or 1 year rather than at short-term tenors that we will see a return of the money markets to their normal function.
Chancellor, Mr Neil has raised the issue of the guarantees which are in place following the bailout of various banks. He asks what guarantees are in place to ensure that the taxpayer receives any profits and or our money back before being paid out to the shareholders and the boards of directors.
Okay. What we've done in relation to the 8 major banks on the Nationwide Building Society is in return for them raising their capital, and remember, and this is quite an important distinction, most of them are doing so through the markets, in other words, under their own steam. RBS, HBOS and Lloyds TSB are using the recapitalisation fund, and so they're treated slightly differently from the other banks. But in return for that, what the government is doing is guaranteeing interbank lending, and it's doing so for a fee. In other words, if we guarantee it, we charge a fee, so that the taxpayer would be rewarded for that, if you like. In relation to those banks where we have used public funds to recapitalise them, we're saying there that additional conditions will attach in respect of lending to small and medium-sized companies, and also in relation to the mortgage market. There's also restrictions too on payments of dividends, and basically what we're saying there is that we've taken, as you know, preference shares, which come with an additional payment as well as ordinary shares. And the reason that we've done that is to make sure that we didn't end up in a situation where the public recapitalised these banks only to see the money go out the other side without actually fulfilling the function that we wanted. So there are conditions, and as I said when I made my statement in the House on the 13th of October, those conditions do mean that where there's guarantees, there is a fee for it, and of course in relation to shareholdings that we take when we come to sell them in due course, and of course when we get dividends, and then when that becomes possible, then the public will get a return there as well.
But you know that from Treasury questions there's serious concern from small businesses, from homeowners, that the very banks which we've bailed out don't appear at the moment to be honouring that commitment for getting money back, supporting credit availability at the same level as last year, not pursuing people to repossession and so on. Shouldn't we publish, or shouldn't you publish, the agreements that you've reached with these individual institutions so that their customers can actually check whether they are complying with the agreement?
Well, look, there's a couple of things here. I am about to write to you, Mr McFall, in your capacity as chairman of this committee, setting out the details of the holding company that the government is setting up today to manage the shareholdings in RBS, HBOS and Lloyds TSB, and probably also Northern Rock and Bradford and Bingley, or that part which the government still maintains. And that letter will set out the objectives of this company, which are to ensure, as I said in the House at the time, that these companies are managed in a commercial way and at arm's length from the government. They will also, of course, being the shareholder in these banks, and a substantial shareholder in relation to both RBS and, assuming the merger between Lloyds and Bank of Scotland goes ahead, although a minority shareholder, still a substantial one, they'll make sure that those conditions are put in place. But as I said in the House, in addition to that, although the wider body of banks, those who raise their money on the markets, are not subject to the detailed agreements which I was referring to, we do want to ensure that we encourage them to do as much lending to small businesses as possible, and of course to lend into the mortgage market. And you probably are aware that Lord Mandelson, the Secretary of State for Business and Enterprise, and I met the banks last week, and we agreed that we would need to meet on a regular basis to make sure that we did everything possible to make sure that funding is being made available. What I have said in the House of Commons, both on the 13th of October and last week at Treasury Questions, is that, yes, of course, the availability of money must be maintained and it must be at competitive rates. But that does not mean that every single person who wants a loan will necessarily get a loan at the terms they want. Because we all, and this was pretty much on a cross-party basis, people did say that what we can't do, having done all this, is to then go back into the very irresponsible lending that so many of us have been critical of. So it doesn't mean that automatically there won't be any difficulties. But what I'm very anxious to do, and we will be putting in place arrangements, and I agree with you that we should publish agreements that we have, so that people know exactly what is possible, and and they'll know the terms and conditions on which we do it.
Okay, Graham.
Thank you, Chancellor. Eric Daniels, the Chief Executive of Lloyds TSB, has been quoted as saying that the bank faces very, very few restrictions as a consequence of accepting the capital injection from the public. In that context, would you respond, please, to Joan Neddington's question, who says that she understands the importance of bailing banks out, but as a taxpayer, I object to my taxes funding bonuses. What is the government going to do to stop this?
Well, in relation to Lloyds TSB, on the assumption that they take up the shares that they have indicated they will from the Bank Reconstruction Fund, they will be affected by the same restrictions as HBOS and RBS, the conditions that I was referring to, in relation to lending, in relation to the payment of bonuses, in relation to remuneration of their boards. So anyone who uses the Bank Reconstruction Fund is treated the same way. And as I say, in reply to Mr. Ainger, I will arrange for those agreements to be published once they are concluded.
So are you saying that bonuses won't be paid next year?
Yes. We don't actually expect many bonuses to be paid at all in the banking system next year. But what we've said is that there will be restrictions whilst those preference shares are there. I'm not sure if you're referring to the prospectus which Lloyds TSB published today, but no doubt you will want to have a look at that. But it anticipates being in a position to try and redeem the preference shares rather earlier than anticipated, and once they are redeemed as part of the agreement we struck, then the different set of restrictions would then apply.
Order. I'll suspend the sitting for 10 minutes. Resume.
I'm glad you have it. Would you accept, then, Chancellor, that in relation to bonuses, in relation to dividends and preference shares, there is a sense which has grown up that the deal which was put on the table at the time of the recapitalisation is not exactly the same as the deal that's on the table now?
No, it hasn't changed at all.
It hasn't changed at all?
No.
So you think that for Barclays, for any of the banks that didn't access the scheme at the time, they have done so on precisely, they've made that decision on precisely the same terms as Lloyds TSB and RBS and the others?
Well, I assume they have. So the position is that we said you need to recapitalise, and there's two ways you can do it. One is you can do it through the markets in the normal way, which Barclays have chosen to do, or you can get capital through the bank recapitalisation scheme, and the conditions are different if you do that. And the banks themselves, and indeed Barclays' position hasn't changed either, because right on the weekend these discussions took place. You'll recall that when I made the announcement on the 13th, I indicated that Barclays was proposing to make its own arrangements.
Aren't you concerned, then, Chancellor, that what you've created is a very uneven, inconsistent situation where different banks are regulated in different ways, have different competition rules applying to them than others, and it's not really a level playing field?
No, look, and this has been reflected by some of the emails you've been getting. If we had said we are willing to recapitalise you and there's no strings attached, then I think quite understandably you'd have been saying, how come you've allowed such a situation to arise? Now, I don't think it's unreasonable if you take a bank where we might have over 60% of its shares, or in another case over 40% of its shares, that we shouldn't say there are restrictions. I mean, if you take, for example, the restrictions on both the bonus payments being made to the board, I don't think it's unreasonable to say, look, you've got into a situation where you need exceptional recapitalisation. We're helping you, but you have to accept there's some restrictions on what you can otherwise do. And also, in relation to mortgage lending or lending to the small business sector, it is not unreasonable that if you put very substantial sums of public money into the banks concerned, that you don't get something in return for that.
Thank you. I want to come back later in relation to the Icelandic banks, but just finally, for the moment, I'm glad you mentioned the emailers, because the chairman just told me to do the same thing. And still on the theme of consistency of treatment, Susan and Jean have emailed us, wanting to know why it is that they, as people who are losing out very badly from the situation with Equitable Life, are not being treated in the same way as people who have lost their savings potentially through banks or building societies.
Well, as I think I've said on a number of occasions, we will make a statement on how we deal with Equitable Life following the Ombudsman's findings shortly. But it's a different problem to the problem we're dealing with just now. Equitable Life is not a bank. It has problems which go back for 15, 20 years, and there was an inquiry by Lord Penrose 6 or 7 years ago. There then followed a 4-year inquiry by the Ombudsman, and I have been looking at both. And as I said, I will be publishing our conclusions on that shortly. I'm
sure you'd accept that it feels the same if you're in the position of having lost your pension savings as if you've lost your life savings in a bank.
Well, absolutely. I understand the position of anyone who has entered into an arrangement, and the arrangement turns out to be different to what they thought they were entering into. I suspect every one of us around this table who are members of Parliament, I have many constituents who are affected by what happened at Equitable Life. But as you know, the situation in Equitable Life is, Lord Penrose found that the company, as he put it, was substantially the author of his own misfortunes. The Ombudsman has also pointed to a number of failures which she's identified. Now, I need to respond to both, so I understand perfectly well the point that Susan and Jean are putting, and I hope that we can respond to Susan and Jean, and indeed many, many others, shortly. I hope so too.
Okay. And Chancellor, John has read your financial stability report. That's me. The one
have you sent an email in as well, have you?
You produced in October, which is excellent. And I note that in 2002, lending and consumer deposits were in balance. But in 2008, lending exceeded deposits by over £700 billion. How did we get so much out of kilter? And what's the future now in terms of lending and deposits?
Well, the banking system borrowed more through wholesale funding in order to expand its lending, and it believed that it was profitable to do so, that it could finance the cost of borrowing by earning suitably adequate returns on the lending that it was taking. And that strategy seemed to be quite profitable until August 2007, when the risks involved in borrowing very short term to lend what perhaps was thought to be short-term through securitized instruments, but turned out to be lending long-term when the securitized mortgage market closed, that turned out to be rather risky. Now, as for the future, the banks will need to regenerate new sources of funding. The level of savings will be there. Indeed, one would expect that in the next year or two, the domestic economy will be saving more as a fraction of GDP than it has in recent years. So I've no doubt that the savings pool is there. And one of the aims of the guarantee borrowing programme is to give banks a start in terms of obtaining guarantee borrowing to start funding lending to the real economy by looking to those sections of the non-bank financial economy and the non-financial sector from which it was not obtaining funds before.
Yeah. But Lord Turner, in retrospect, that seems a no-brainer. Getting out of kilter so much as £700 billion. What's going to happen in the future then? Do you think it will be more in balance?
Well, I think it is exactly the sort of issue that needs to be looked at in far greater attention in future by regulators, by central banks, by governments throughout the world, to do this sort of macro analysis. I think if I pick up the question earlier of admitting errors where they occurred, I think the FSA has admitted two errors. It has admitted errors in relation to
the past with FSA. But just look at the future, because we need precise answers here.
What is going to happen?
Yeah.
Well, I think there is going to be some sort of process of rebalancing, because let's be clear that part of that money, that imbalance, part was coming from wholesale borrowing within the UK, part was the flip side of the current account deficit. And some of it was effectively coming from purchases by, for instance, American money market funds of retail mortgage-backed securities from the UK. The fundamental problem that went wrong there was not actually a problem of bad assets. It is probably the case that large numbers of these retail mortgage-backed securities will pay off on time, as it says on the paper. The fundamental reason was that the underlying investors, American money market funds, were doing maturity transformation. They were investing in long-term assets with short-term liabilities, and they are no longer willing to do that.
Okay, big question. John.
Thank you, Chair. I have an excellent question here from Leighton Jones, who says, I question whether it is necessary for HBOS and Lloyds TSB to be merged. Each company will have its own injection of government capital, and by keeping them as separate entities, we will avoid the need for an artificial calculation of the value of HBOS shares in terms of Lloyds shares, and we will retain the competitive element in mortgage and banking facilities that HBOS has always provided. Governor, could I ask you, bearing in mind Mr. Jones's question, what are the pressing matters of financial stability that have meant that the Lord Mandelson has overridden the obvious competitive disadvantages in pushing this through?
Well, I don't wish to speak for Lord Mandelson. I think it's a question you can put to him.
But I think
from our point of view, I think what we saw at the time when the merger was engaged was HBOS was suffering from a very rapidly falling share price and clearly a loss of confidence, which was undermining its ability to continue as an individual entity. And I think the only alternative to the merger would have been a full-scale nationalisation. And I think that would have had quite dramatic repercussions for the UK banking sector. So that merger, I think, was a very important step. And it's still there as a commercial transaction. That's not for me, it's for the market and for the regulators to decide where that goes from there. But I think our advice, which we gave at the time, was that in the interest of UK financial stability, the merger was a desirable outcome.
Would you have given the same advice if you had known that a few weeks later you would be taking a share in all the other banks?
Well, I think it's impossible to say, because in the circumstances where we gave the advice, the loss of confidence in HBOS was there, and only something pretty radical would have stopped it. So I think that's a hypothetical question that it's very hard to answer. But there's no doubt that when we made that recommendation, we were very conscious of the difficulty facing HBOS. The merger was the right way forward. And now that it's there on the table, you can't undo it. It is a merger there. It's going to be a commercial transaction, and we'll see what happens.
What a lot of people are asking is, the deal for a merger was obviously the right thing at a point when the HBOS was the only institution in trouble. That was the perception. What we have arrived at is a situation where the whole system was in trouble and needed to be rescued. A wholly different situation. And therefore, why is nobody revisiting the merger, given it has some pretty nasty side effects in the reduction of competition?
Well, there is a commercial transaction on the table, and the two parties have to make up their mind about that.
Let me ask you, Chancellor, then. This started, obviously, as something that came out of Downing Street in terms of a solution to a problem, and a good one. But there's now a completely different problem. There's a completely different solution. Why has this now become a commercial decision that doesn't need any intervention anymore?
The initial move in relation to this came from the two companies themselves, as is fairly well documented and was made public at the time. HBOS and Lloyds TSB started to talk to each other. Now, why was that? Well, obviously, Lloyds saw an advantage for them, but HBOS, you may recall, earlier this summer, had to engage in a rights issue. It wasn't without its problems. And HBOS reached the situation where it needed to find some way to get through things, and it came to the view the best thing to do would be to enter into a deal with Lloyds TSB. Now, the competition authorities would have been engaged at that point because of the combined strength of that bank. I made it clear at the time that I was prepared to see that the competition issue could be trumped by the issue in relation to financial stability. Now, and that is a decision that Lord Mandelson took on Friday. He did so under advice from the Bank of England, the FSA, and from the Treasury. Now,
but can you explain to me why
I'm just about to do that.
Why it should remain necessary today?
What I'd say to you is two things. One is, it is up to the shareholders in Lloyds and in HBOS as to whether or not they want to vote for this merger. If they don't do so, then we will have to proceed on the basis that we've got Lloyds TSB on the one hand, HBOS on the other. Both will have to go back to the FSA and will have to recalculate the capital requirements and proceed accordingly. However, you should look at what the OFT report says about HBOS, because it makes it clear that the most likely shortcome without the merger wouldn't be a strong independent HBOS continuing to exist and exerting the same competitive pressures as it was in the past, because it recognises that HBOS has a number of problems. Remember, it was very, very heavily dependent on the wholesale markets, the markets we've been talking about, markets that have virtually dried up, in fact, have dried up. And so that the idea that HBOS was a perfectly happy, functioning bank, and there was nothing wrong with it, and then along came Lloyds TSB and put in a bid for it, that isn't quite right. Look at what the OFT report says. And when we looked at this, the authorities, the Bank of England, the FSA and ourselves, it was our view that the financial stability argument was still a strong one. Now, at the end of the day, it's up to the shareholders, and indeed it is open to anybody else to come along and put in a bid for HBOS. The only thing I'd have to say to you is that so far, no other bid has been put in place. And the problem we had was, if we had not intervened, if we'd not allowed the Lloyds bid to have gone forward, then HBOS would have been in an extraordinarily difficult situation. And again, HBOS, of course, has benefited very substantially from the recapitalisation coming through the government's recapitalisation fund. Why is that? Because, frankly, it needed the money. But you should look at the OFT report, because it do make the point that if this doesn't go ahead, it does not mean that HBOS is out of the woods. Far from it. It still has very substantial problems that we need to resolve.
Can I, because we're under a time constraint, can I ask for a couple of quick answers to a couple of quick questions? One, is it correct what was said by a minister in the House of Lords that the funding for HBOS was contingent on the deal going ahead, and if the deal didn't go ahead, there would be no funding for HBOS?
No, I'm not aware of anyone saying that. It couldn't possibly be the case, because HBOS does need capital, and the amount of capital it needs was fixed on the assumption that the merger would go ahead. If that merger does not go ahead, it will have to go back to the FSA.
It's available, but it has to go.
Yes, and I've said that on a number of occasions.
Second question. Over the weekend, there was much speculation about a rival bid, and there was a gentleman's name mentioned. If that materialises, will you give it a level playing field?
Yes. Legally, there is nothing to stop anybody, any third party, coming along and putting in a bid. Right. And if they want to talk to the government about it, they can do so. But as of now, or at least as of when I set off to come to this committee meeting, there is no other bid on the table.
A question for Lord Turner. If, and we must assume that it will happen, stability returns to the banking system, and in a couple of years you discover you have a problem of competition with this giant bank, what will you do about it?
Well, we are, of course, not the direct competition authority. That is the OFT, which is responsible for competition. I think we will all jointly have to look at that situation at that stage. I think it's not clear that we are heading towards a banking system so concentrated that there can't be reasonable competition. I mean, we have quite a few players still, including big building societies like Nationwide and, of course, AB Santander. So I think that is an issue which will have to be looked at the time, but it's certainly not a direct issue, or certainly not in the sole competence of the FSA, because it is a competition issue rather than a prudential or conduct of business regulation issue.
Turning to a different subject, one question, Chancellor, if I may, and it's regarding compensation for the shareholders in Bradford and Bingley. And I have a constituent interest in that one of the ministers of the churches has managed to put his entire life savings into Bradford and Bingley shares. But there are a lot of questions. Archie Gardens asked a question, Luke Goh, and a number of others. And what they basically say is the chief executive said the bank was fine on the 25th September. 4 days later, the government nationalised it. Given what's now happened to everybody else, isn't that very unfair on those small shareholders or those shareholders?
Well, I think everyone feels very sorry for people, particularly small shareholders and Northern Rock and Bradford and Bingley. And the position is that the shareholders on Bradford and Bingley would be entitled to participate in whatever assets that company has left once its other obligations have been paid off. To be realistic, the prospects are not great when you look at the position it's in. But the problem with Bradford and Bingley, again, it had two problems. It was very exposed to the buy-to-let market. It also had a problem with the self-certification of mortgages. And, we, as within so many other institutions, we did everything we could to help it. But it reached a stage in September, when the FSA concluded that it no longer met its obligations and it therefore could not be allowed to carry on taking money in.
Do they have any recourse to the executives 1, 2, 3 days before? We're telling them everything was absolutely fine and to leave their money in.
Well, I think I'd be hesitant about giving anybody legal advice as to whether or not they have a remedy or not there. There is my recollection is there's quite a lot of case law on this, but I think anyone before they took any action would be well advised to take proper legal advice.
We've had a few questions on that from Archie Garden and Luke Gould and Lord Turner. Richard Pym on the 25th of September stated the changes we've announced today focus on the business as a strong savings bank, reduce the size of our lending activities and increase our capacity in arrears collection. We're now strongly capitalised, undertaking a complex transition with regrettable job losses, but planning to put the problems behind us and have a business fit for purpose going forward. Was that misleading?
I think the thing that you have got to realise about any bank is that there is a distinction between its solvency on an ongoing basis and its liquidity position. And you get a situation where a bank, where if there is a loss of confidence in it, that in itself becomes a self-fulfilling process by which people are then rational to have loss of confidence in the bank. And that, bluntly, is just one of the central points to realise about a bank, that because it does maturity transformation, because its liabilities are shorter than its asset. The other thing I do need to... I think, sorry.
Just as a simple point here, that if you've got money in Bradford and Bingley, and the Chief Executive stands up 4 days before and says, we're a real strong company, we are going forward, and then it's Armageddon 4 days later.
I think the pace at which things were moving in those 2 weeks after the Lehman's bankruptcy is almost impossible to exaggerate. I think all of us realise that things did literally move day by day in terms of the way that the money markets were operating, and I think that is a context that you need for those sort of statements.
And it wasn't bad supervision, no?
No, I don't think it was. You have to remember, I don't believe it was. I have looked at it as best as possible. I think that was on precisely day 6 of my time. In fact, I think it was day 5 of my time at the FSA.
So you never had time to fashion the FSA in 7 days, did you? You never had time to fashion the FSA in 7 days then?
I don't think so.
No.
But I don't. My overall impression, I have to say, is that whereas there were errors which the FSA has owned up to in relation to Northern Rock, I think since then, in relation to its management of what are incredibly difficult crisis situations to deal with, it has worked very effectively, both in itself and with the other tripartite.
We'll maybe come back to that.
Chancellor, Mr. Michael Friedman, I think, speaks for quite a few people when he asks, why is the government allowing Northern Rock to aggressively harass mortgage and loan customers with bully boy tactics to recover debt, threatening repossession and personal bankruptcy against customers who make genuine offers of part repayment?
Well, it shouldn't be, because it should be sticking to the same code as all other mortgage lenders, and that is, firstly, repossession should be a last resort, and that, secondly, it should explore every other option.
So why are they?
Well, we have talked to Northern Rock about it, who are having discussions with a number of people to see how they can improve their procedures. What would be helpful is if you have specific cases and with the consent of the people concerned, so that I can actually find out what's happened in that individual case, because it is necessary to find out what exactly the circumstances are in these cases, and I'd be happy to look at them. But that Northern Rock is bound by exactly the same considerations as other people. There is a specific problem in Northern Rock, and that is they have a number of mortgages where they lent at over 100%. Where it is quite clear that there are more people in that category who are getting into difficulties, but they ought to be behaving in exactly the same way as all other mortgage lenders. If that isn't happening, if you let me have the specifics,
well, I
then I'd be
suspect
happy to look at
within
it.
5,000 pieces of paper there, you might be having a few of those.
I would, but what I do need in each case is the authority of the individual for me to investigate their own, what has happened in that particular case. All of us as members of Parliament are familiar with this, that if you really want to find out what's going on, we actually need to know what happened in that particular case.
Thank you. Governor, about a year ago, I think, when we were in this sort of format, you and indeed Lord Turner's predecessor said to the committee that, quote, Northern Rock has a good quality loan book. At that time, I rather doubted it, in the sense that the sorts of mortgages they were undertaking and trying to suggest to us that they were below the industry average for defaults was rather proved to be more correct. What sort of real evidence did you have to give us the impression that Northern Rock had a good quality loan book?
We were relying on the reports that we received from the regulators, but when we looked at the mortgages that we took as collateral, the mortgages that we took as collateral did not in fact have particularly high loan-to-value ratios. And at that time, as you pointed out, the experience of the performance of the mortgages was certainly no worse than that of other mortgage lenders on average.
So you took the word of Lord Turner's predecessor?
Well, it was perfectly reasonable to ask the FSA for information about the quality of the loan book. It's the only basis we had to go on.
That sounds very reasonable. Lord Turner, why did the FSA tell the Bank of England that Northern Rock had a good loan book when quite patently they didn't?
Well, I think it was the case that Northern Rock did not have the same concentration on either buy-to-let or some of the impaired credit categories of borrowers that, for instance, Bradford and Bingley had. It had, on the whole, quite a lot of mortgages which would be counted as prime mortgages in the normal definition of it. And, of course, let's remember that at that time, not only in Northern Rock, but across the board, the level of arrears was actually very, very low in the UK. I mean, it has gone up since then, and we are worried that it will go up further. But as of when they will have made that statement last year, although somebody who was predicting what would have occurred on principle might have said it would turn bad, there was not evidence in the arrears data at that time to suggest major bad debt problems. I think it is also important to notice what I think the Governor has just said, that I think it was in relation to the thing that was presented to you as security for lending, that actually the loan-to-value ratios were not particularly high. They were not outliers. So I don't think it is the case that Northern Rock has turned out to be a big outlier in quality of mortgages, whereas that is true of Bradford and Bingley.
But at that time, you were aware that they were lending 125% of valuation on incomes of 5, 6 and sometimes 6.5 times income. That didn't apparently have any sort of a trigger for you to think. And there was no real investigation into the together mortgages, which actually concealed much of the potential arrears problem, which has now been exposed. And so the FSA really didn't do enough investigation in order to give the information and advice to the Bank of England that Northern Rock had a good quality loan book.
Well, I think you have got to distinguish between the average and the overall. I believe that Northern Rock's accounts show that the average loan-to-value on new lending in 2007 was 79%. Now, that in and of itself would not immediately tell you that there was a major problem. I think it is true that there was a tail of very high, and in particular above 100% loan-to-value ratios. You can, under certain circumstances, justify that if you have a very, very clear income-based underpin for creditworthiness. I mean, the creditworthiness of a mortgage is always a combination of the asset cover and the income cover. So I will accept entirely that there was a minority of the Northern Rock book which had some particular features. But I think, looking at the average figures at that time, whether it was loan-to-value ratios or whether it was the arrears experience then being experienced, you would not necessarily have seen Northern Rock as an outlier in terms of quality of mortgages. Where you would have seen it as a very strong outlier was in the nature of its funding sources and its reliance on wholesale markets. And that's why, at the time, what the problem was essentially a liquidity problem rather than a solvency problem.
But it never occurred to anyone that the fact that someone was doing 125% mortgage deals on 6 times income, that they might just have a slightly more risky loan book than the average.
I'm sure that did occur. What people would have to look at was across the whole of the average loan book. And as I say, if you looked at the aggregate average figures for Northern Rock, I don't think it was clear that it was an outlier. And therefore, I think insofar as there was a regulatory failure to focus on key things at that time, it was much more to do with a failure to focus on the structure of the funding rather than the particular characteristics of the loan book.
Thank you. Chancellor, turning to something quite different. Why was it necessary for the government to use anti-terrorism laws for the purpose of freezing the assets of the Icelandic banks? Were the existing laws relating to insolvency not sufficient to cover this situation?
No, they weren't. And actually the legislation we used, although it does cover terrorism, it also covers the powers that we have to protect the country's general economic interest. And interestingly, when you look back at what happened when the legislation went through Parliament, there was an amendment laid in the House of Lords to try and confine these powers to being used in the case of terrorism, and that amendment was voted down. So I think it was contemplated at the time that those powers might be used more widely. And indeed, in my statement, I think on the 15th of October, when I said that we were using these, the powers under that Act, I did make it clear that these were general powers that are available to the government. Can I just say this? That's also important. You need to understand why we were doing this. We still have a situation now, 5 weeks later, where we have stepped in to guarantee the retail depositors in the Landesbanki subsidiary. And as of today, we still don't have an agreement from the Icelandic government that they will cover us for it. So we did need to step in to protect the interests of the British taxpayer.
So at the end, Colin, we don't want to do that just now.
Effectively, that was the end justifying the means.
I think we'll come on to that.
Hold on, no. I'm afraid,
Chancellor, we want to do the Icelandic one at the end.
Mr. So let's get into that. Something that I really need
very
to
quickly
to it.
Count it and then go on.
It is my job to protect the British taxpayer, and I'm very happy to stand up and justify that. I couldn't have a situation where we potentially are exposed to billions of pounds in covering this, and there were assets there which I could perfectly legitimately use powers that Parliament has given us to use, that the Act may have provisions in it in relation to anti-terrorism, but they also go far wider than that.
Sally. Sorry, Mark, and then Sally.
Can we turn back to the FSA's role? The internal audit report on Northern Rock demonstrated the poverty of regulation of that particular institution, but also generic failings in the banking regulation sector of the FSA. Mr. Hoare and Mr. Maloney both asked what is being done to strengthen the FSA's grip on the regulation of the banking sector.
Well, since the internal audit report was produced, and it was, of course, the FSA which was most instrumental in pointing out its own faults, and those faults include inadequate resources devoted to some potentially high-impact firms, too rapid turnover of some of the key staff, and a failure in some classic process things to document and make clear what had occurred and to stick to the procedures. A very major programme has been put in place. It was put in place earlier this year. It is called the Supervisory Enhancement Programme. This entails the additional 218 people in focused relationship management supervision. By relationship management, we mean the supervision of those larger institutions where we have dedicated professional people to them. So that is 218 extra people, which is on top of about 500. Think of it about that.
Are they in post now?
There are 38% of the positions have so far been filled. We are doing that from a combination of external recruitment and internal moves.
You must have a fair number of poachers seeking to be gamekeepers just at the moment?
I think we could probably say that the environment for recruiting is slightly more favourable than we might have anticipated last year. That is correct. So, yes, we are recruiting people. We are making sure we improve the quality of people on average. We have designed a new induction programme for all new supervisors, which will be a 9-week course in core supervisory skills, and we will also be putting our existing supervisors through that process with a defined training and competency scheme.
I think it's enough to say